It is time to learn about taxes. So the financial year is actually from July 1st to June 30th. I don't know if you've seen the end of financial year sales in June. That's because that's the end of the tax year. And individuals complete a tax return, includes all forms of income, including interest from investments. And you can take off legitimate tax deductions, such as receipts and invoices for work-related expenses or donations. So if you make a donation, that's a tax deduction. Taxable income is the amount of money you get paid minus those tax deductions. So a deduction will reduce the amount of tax you have to pay ever so slightly. So the Australian Tax Office includes tables and calculators such as the following. And this is really cool, okay? So if you make between 0 to $18,200, you don't pay any tax on that, right? That is, a lot of you probably, when you have your first jobs, will not pay tax until you get to 18,201, and then you're paying 19 cents for each dollar over that, over 18,200. So that's 19 cents out of 100 cents, 19%. And you pay 19% on everything you earn up to 45,000. And then you're in the next tax bracket, and this tax bracket goes from 45,001 all the way up to $200,000 per annum per year. And so you would pay $5,092, which is all of that you would have paid. So that tax amount between 18,201 all the way up to 45,000 is taxed at 19%, which comes out to, if you're above that we round that to $5,092. And then for everything you make over that, so the rest of your income, not everything, but the rest of your income above that is taxed at 30% until you get up to $200,000. And then everything above that, you will have paid this much in tax already, which looks like a lot of money. And then anything above that, you're paying 45 cents for each dollar. So 45% tax, again, only on that part of your income that's above $200,000. Individuals may also need to pay a Medicare levy, and that is currently 2% of your taxable income. So if you pay too much tax, which often happens, you will receive a tax refund at the end of the year. Possible that you paid too little tax, been there, and then you'll have to pay some tax at the end of the year. So here we go. So Richard earns $1,050 per week, which works out to $54,600 per annum per year from his employer and from other sources such as interest on investments. He has receipts for $375 in work-related expenses and donations. So what is Richard's taxable income? Taxable income is what he's made minus his tax deductions. So Richard's taxable income is $54600 minus that $375. So his taxable income will be a little bit less, and it's at 54,225. So we're going to need that. So that's what he's being taxed on. Now we're going to use the above tax table to calculate Richard's tax payable. So I'm going to kind of put it on its head. From $0 to 18,200, he's paying nothing. But then from 18,201 to 45,000, he is paying, because his annual earnings is more than that. He's going to pay the total of that 5092 plus 5,092. So what we need to figure out is what he's going to pay for that next bracket from 401 to 200,000, and he doesn't go above 200,000. So we just need to figure out what that is. So that gets taxed at, we took care of that, 30 cents for each dollar over 45,000. So we need to figure out what that difference is. So the difference is going to be, first let's work out the difference. He made 54225, and we want to figure out what the difference is between that. So let's get our calculator. 54225 minus 455 is, that's it. So it's 9225, but it's not all of 9225. It's 30% is what that tax rate is. So we're going to put 0.3 times that. So then we'll have 5092 times whatever 30% of 9225 is, and that will give us a total of 7,859,500 1150. That's the tax payable. He also needs to pay Medicare levy, which is 2% of his taxable income. Well, that's easy. That's 2%. We can write that as 0.02. We could write that as 200ths. 200ths times his taxable income of 54225. If you're in the mood to do it as a fraction, do. But let's just say that that works out to is the Medicare. That's what he's paying for Medicare. That's what somebody pays each year if they make $54,000. Add the tax payable to the Medicare. All right, we're just adding here. So the tax payable up here was 7859.5, and we add that to 1084.5. And so total tax payable including his Medicare levy is, so this is what he needs to pay, 8944. Terrific. Now express the total tax in Part D, which we just did. So that's everything he has to pay as a percentage of his taxable income. So Medicare levy is part of that tax system. 8944 out of what he's got to pay. And how do we make that a percentage? Times 100%. And that equals 16.5% to 1 decimal point. Now, during the financial year, Richard's employer sent a total of that much money. Has Richard paid too much or not enough? How much was he meant to pay? He was meant to pay this amount. And what his company has paid is that amount. So we need to do 8944 minus 7797. That gives us 1147. And since there's more tax to be paid, therefore, Richard owes the ATO $1147. And that's taxes.